Matt, I want to move on to this piece, the Cotality piece, the rising cost of staying put. I mean, we talk a lot about, home prices, the price of homes or the price of rent. But that's not the only reason, the big cost burden that's out there. Taxes and insurance are beating
They don't
people
even
up.
get into maintenance issues that I always was. That's the big surprise. You buy a home and it's like, oh man, here's all the things that are wrong with it that you need to fix or maintain. And
I know it's tough, but I think these are the they call them uncontrollable expenses. Where capex, even though your hot water heater goes out, you don't have much of a chance about the got to do something about it. But taxes, insurance, you got to pay your taxes, and if you want a mortgage, you're going to have insurance that you're going to have to pay along with that. And again, it's just the rate of growth. Some people just don't think that their insurance rates are going to go up or their property taxes are going to go up. When they look at that mortgage payment, they know what their interest payments are going to be, and they know what taxes and insurance, and they project that, but they don't assume that their insurance is going to double or triple, or property taxes are going to double.
What is part of the increase because the home values are increasing, and then that would raise your property taxes?
Sure, that's one way.
Because that's something that's like,
or do you get assessed? You could have been under assessed for years, and every state is different, every county is different how they
because that's what I was thinking. Like taxes may not have. So insurance it seems like it's always going to increase along with inflation. Taxes not necessarily. In some places maybe property taxes go down, although I don't know. I'm not as plugged into that. I know didn't Indiana have has some kind of different law coming up? So I'm not sure.
Got the expert here.
Yeah, I know. Yeah. Well, I do
Indiana
know
just passed a bill, SB1, at the beginning of this year that essentially reduced some residential property taxes and multifamily property taxes. Yeah. Indiana also has a constitutional cap on property taxes.
Well, and I mentioned this because Indiana is one of, so they have a list of places with states with the highest year-over-year changes in mortgage delinquency. So they talk about insurance and property taxes as kind of a way like this is kind of why everyone is delinquent on their mortgages. And Indiana is ranked like 9th out of the 10th with a year-over-year increase of 13 basis points. So 0.13%. That's how much their delinquencies changed since last year. That's compared to Florida where delinquencies changed 0.38%, and they're linking this to an escrow, a percent of escrow change. So how much this escrow, which represents the taxes and insurance payments that you're paying to. That just represents the increase in taxes and insurance payments. It went up 62% in Florida. It went up 49% in Indiana. 49%. That's a big increase. Just among these ranked. That's pretty huge. I don't and this is I did have a slight problem at least with these 10 states listed here. They are trying to make the association of the higher percentage change in escrow, the higher that increase, the more likely there's going to be a big increase in delinquencies. I don't know if that's perfectly connected because you have 62% escrow change in Florida. Well, you also and that's 38 basis points of delinquency change. But you also have 62% in Colorado, with only 13% of change. So maybe if they expand the numbers, it looks a little different. I do think, regardless of how it directly causes, I think it is an added burden for affordability. It just adds the idea of homeownership as this place where the prices are so inflated, we don't know how deflated they are yet. And like when I was making my notes, I had this metaphor of like, it's like there is a pressure difference, and the prices could implode, and we need commerce to happen. We need buying and selling to happen in the single family home market for people to realize, oh, actually prices should be lower than they really are. But because because there's not enough homes to make that decision, there's this it's like a weird negative vacuum pressure, I think, in the housing market, which pretends like the future deflation maybe of housing prices or further softening at least.
I mean, we've talked about this in the past, but I mean, what's going to be that catalyst? I mean, it's going to be folks finally deciding that they need to sell that home and move and bite the bullet and say, maybe I'm going to have to be paying more, but I have to relocate, and the cost of this I can't
That's
let my whole life
good point.
dictate or be dictated by this house.
Yes, so that's a really good point. So, getting back to the title of the article, like some people can't afford to move. Some people can't afford to move because they're so tied to their job, and for whatever reason, a lot of you have this job and it's incredibly important. You can't find an affordable thing within a certain commuting time or maybe a bus route because you don't have a car. There are people that it's very tied to location, and that makes them even more vulnerable, I think, and it makes them even less likely probably to buy a home if they're looking at these costs. And I don't see any way out of it. So I think that's the not, I don't even want to say a hidden cost, but it is an example of, like, you scratch the surface of the housing affordability crisis and you're going to see a lot of it's not just mortgages, it's insurance, it's utilities, it's it can bleed into a lot of different areas that are duly covered by the CPI. But I just wanted to point out that that there's still demand out there, and even though the prices are softening, the weird part is we're still in an ultimate deficit of housing.